Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, as we look back on last week, the S&P was able to rally 1.5%, the NASDAQ also 1.5%, the Dow Jones was up 1.8%, but the big winner was the Russell, up 4.4%. This has everything to do with that rotation that I've been talking about for the last couple months. I'll go through the spread charts to show you how this is unfolding in the technical section here shortly. But as we look back on last week, there were a lot of reports. We got the unemployment report to come out on Friday. Those were some big numbers coming out. The unemployment dropped down to 7.9%, which was much bigger than expected. Even though it dropped because of participation rates down, there was something else going on as you look through the report. One of the things is amazing what's going on is manufacturing. Now, the expectation was that we would see 35,000 new jobs. Well, it was 66,000. Manufacturing is just on fire. They're continuing to see this thing just ramp up. Even looking back at previous months, total employment actually was revised upward as well. So all the naysayers talking about the economy not coming back and we're going into a further recession, I don't believe that's what's going on here. We are still seeing a lot of areas, and maybe the so-called K-shaped recovery is right, because they did destroy industries in this COVID shutdown, and it's very likely that some of these industries aren't going to come back. If you also notice, looking at the employment report on Friday, you saw that hospitality and leisure, that area was also a hot area. There appears to be a serious shortage of labor, possibly because of some of the previous stimulus. People aren't willing to go back and do those jobs, or maybe they're just looking to change right now. But there is a tightness in the labor market, especially around that hospitality and leisure areas. But as we go forward this week, there's a number of things that we're going to need to watch for. FOMC meeting minutes will come out on Wednesday. That will be looked at pretty heavily. On Monday, we'll get non-manufacturing ISM report, and that's expected to come in at 56. This will be big. If we come in at or better than that number, that will also solidify these things that I just talked to you about, that the economy is continuing to come back. There's a lot of negativity out there, which even makes the markets even more bullish right now. As I've been discussing over the past several weeks, we're really in this monster sideways trading range. Now, we won't know, as I've talked about before, how this thing plays out for a number of weeks yet, and definitely after the election and potentially all the way into January before we'll see any breakouts of the markets either way. We'll see how it all plays out, and as the weeks go by, we'll continue to see more of the patterns that are unfolding. The other thing that I've been discussing with you has been the stimulus, and I don't think they're going to have a stimulus bill before the election. I heard rumors the other day that Nancy Pelosi all of a sudden wants to talk since Trump got COVID, but now that he's already out of the hospital and heading back to work, I'm not sure if that's still going to be in the playbook. But regardless of that, even if they did do the stimulus, I'm not sure they need it, because the economy is definitely coming back very strongly, and all we really need is some restrictions off California and some other states to open up, and we're going to see further expansion in the economy. But as we just look at things in general as we come into this week, it looks like we're going to start off on a positive note based on overnight action, but there's still a lot of challenges ahead. And I don't think there's going to be any major moves before the election unless there's some kind of event that we don't know about. My expectation is that we're still going to see this large consolidation. Let's go ahead and take a look at the charts, review the database, and see what we got set up for this week. As we review the WaveTech database, the short-term models continue to get traction. We did see nearly 700 new buys versus 150 sell signals. Both 1.2 and 3.2 had a positive rotation. We've now moved the needle back to 13.83% bullish. So this is going to be a key week as this short-term database starts to come back online. There's a couple other things that have happened. As we look at the daily sectors, we're seeing new buys on capital goods and utilities. And so there is some sectors also starting to come back in. There is a beginning of a new rotation coming in on a short-term basis. As I'll go through here in a minute on the technical section, I am expecting to see further upside on a short-term basis, but overall we're going to be locked in a range, which I will define here in just a couple minutes. But we are seeing these sectors come back on. As we click on capital goods, we can see which industry groups are coming on. We have construction and supplies have come on as a new buy, and then construction services. You can drill down. So if you're a WaveTech user, you can go into the daily searches here and you can start to look and see what symbols are long. There's not a lot of them. There's 18 long out of this, but we're definitely seeing some positive rotation, and you can look at what players are coming in this sector and in this subgroup. So this is a very positive thing that we're starting to see unfold on a short-term basis. Now, when we go to the weekly research, we're still at 9,933 symbols long. We're holding at this 60% level. We haven't seen any further liquidation, really, because what we've seen so far is that the weekly models are basically in a neutral, slightly negative on 1.2, 3.2 is neutral. So we had basically the same amount of buys as sells. So we're just seeing a rotation here, and that 60% bullish range is going to stay in place. Now this is actually a very positive sign on an intermediate level, and this is what I've been discussing over the past several weeks, that I would expect to see this rotation continue and a sideways move. It will actually make the intermediate models turn into a more bullish profile as we go down the road if we see a positive rotation back in the short-term database above 26%. As we begin with the S&P 500 futures, we're up about 0.5% right now, trading 33.55. We bump up against this 33.65, 33.67 level a couple times so far in the session. As we look at the daily models, we're going to continue to be locked in this market grid range. As we look at the market grid, we're likely to stay, it's projecting a range of a high of 34.10 and a low of 32.68. And I'll go through full analysis here. This 32.68 is a significant number that comes up within the weekly and monthly patterns. But the futures look to be locked between the 10-period moving average, 33.15, 33.73. We look at the market grid, that's going to be S1, 33.22, and R2, which is 33.74. And as we look at this Fibonacci grid, I've talked about this quite a bit. The 50% level is 33.87. That was at last week's highs. And on the downside, the 23.6 level is 32.87. It exceeds a little bit of that range I just talked about. If you look back at the grid, the 33.85 level is S3. So all of the relationships seem to be fairly good. So let's take a look at the cash market. A bit different look to it, and we've seen the market grid actually turn down, and that is suggesting that as we look at the expectations for Monday, is that the S1 is 33.37 and R2 33.70, with futures up at about 17, 18 handles right now. We're going to come in around that 68 level. So we're going to come in around R2. If we do get above R2, we could go back to 33.82. Last week we saw a high at 33.93, and that is going to be a substantial amount of resistance there. But let's talk about the wave count for a minute, because I want to discuss what's been unfolding over the past 8 to 12 sessions. I have been discussing this pattern over the past several weeks. From the peak, we've got this clear ABC pattern down, and that is completed, which was the ABC, and this is likely an A wave. Now what we're setting up is an ABC pattern. Now we didn't get the normal relationships that we would get in this pattern. It's basically a sideways correction that we've seen. Because of this contraction, it tells us potentially a couple things about this pattern, that the next move up will only be approximately 0.382, maybe 0.5% of the initial move since we had this contracted B wave. That would send us up into 0.618 at 33.42 is my expected high of this pattern. So we're likely to move up about 100 handles again. There's a couple hurdles we're going to have to get over. The first one will be that 93 high that we made last week. If we do penetrate the 33.93 level, then we'll easily go to the 42 level. As I've discussed in the past, I don't think we'll get up to 0.76 at 34.97. That would mean a test of 3,500. About a couple expectations on this pattern. Now I've rounded off these numbers, but this length of this A wave here was 184 handles. Last week's low holds at 33.23, and we can close above the 33.93 level. Then this will set up the ultimate pattern. Right now, a 0.382 ratio of that 184 would equal 70 handles. I've rounded these numbers off. That suggests a retest from 33.23 to 33.93, which was last week's high. That's why this is so significant. The next level would be a 0.5 retracement, would put us up to 34.15, and a 0.618 ratio of that first leg would be 113 handles, or a target of 34.38. So now let's look at the Fibonacci retracements. We'll see that 33.98 is 0.50, is close to the 33.93 high that we saw last week. 0.618 is at 34.42, and the 0.5 relationship on C wave would represent a move to the 34.15, but 0.618 is 34.38, and so this is my target. So the target range on the upside, 34.15 to 34.38, and I do expect if we get up there, there will be a very quick turnaround. Typically what will happen is few as 3 days, and the maximum will be 5 days in this pattern. So we're going to have to watch really closely for one of these prices to get hit. So the key numbers are 33.93, 34.15, and then 34.38. And we're going to be watching for reversals around those points, looking for the top of this wave. So if we extend this up, then this will complete the ABC. This will be the top of the upward ABC, and it will be a B wave right here. And then there should be another ABC down. And this next decline, if all this unfolds as planned, then that next decline will tell us whether or not we're going to take out this 3209 level. And remember, we talked about this a bit last week. There's still a gap, 3309 level and the 3323 level. So we filled part of it last week, but we didn't complete it. And I mentioned this in one of the videos one day, that my expectation is that we would see some retracement, and ultimately the gap probably will be filled after we complete this particular sequence we're in right now. Now, the key levels on the downside today is going to be last week's low, 33.23. If that thing's taken out, then we're going to do a full-fledged retracement. That would suggest that there would be a further retracement of the rally, the 184-point rally. So we'll take a look at that on the weekly chart. The weekly chart also continues to show, if we were to take out that 33.23 level, then the next level down, S1 on a weekly, is 32.69. So there would be quite a bit of risk to the downside. I still don't think we're going to collapse all the way into the 32.18 level, which would be the 21-week moving average. We're going to continue to hover along this 10-week moving average. 33.63 is going to be a magnet. It still has a plus ppm at 0.40. ppm2 is 0.62 and 0.08. So basically, the extreme right now is that 21-week moving average, 32.18. The number at 32.69 on S1 will be substantial. Don't expect to see that happen, but it depends. If we can trade up into Wednesday, maybe we complete this ABC up and we start that sequence. So there's going to be plenty of volatility in this pattern. The next market I'll cover is NASDAQ, and the NASDAQ has a definite, defined range that we're going to see as we come into this week. We continue to hover right around that 10-week moving average, 11,295, last 11,313, so we're just above that number. Looking at the high-low for the night, 11,280, high 11,365. The grid on a weekly basis, the potential is for an S1, 11,089, and an R2, 11,537. There might be an R3 in the books if we get this upward ABC pattern. But that 10-week moving average is going to be like a magnet for the NASDAQ. As we look at the daily NASDAQ futures, it's likely that we're going to remain, at least for today, between that 10-period moving average, 11,226, and the 40 at the 11,388. Looking at market grid here, we haven't quite traded down to the S1 level, 11,155. We're going to look for an S1 R2 number for today's range. The next market we'll look at is the US dollar. And the dollar continues to be in this consolidation. The 10, 21, 40 moving averages are still positive, but we are seeing PPM1 cut through its first and second derivative. PPM2 is through its first derivative, so is 3. Now I'm introducing a new PPM. I haven't used this for a while, but I wanted to bring it back in because we're going to see a number of things come into play here as we come into the next couple of weeks, which is some of the 200-day moving averages on stocks that we'll cover on the live stream and so forth. The very bottom is the PPM 200. That's tracking what's going on with the 200-period moving average. Now, it's slightly negative, but it does have a negative downslope. My expectations is to see a price convergence between the value of the dollar and the 200-day moving average. As we look at the weekly chart, it's interesting because the 200-week moving average is at 96.16. We're trading 93.77, basically flat on the session, but you're seeing some serious acceleration on PPM1 here. PPM2 has flattened out a little bit. PPM3 is through its first derivative. 200-week moving average does have a decent downslope and it's not turning up. So that's going to be your resistance somewhere between that 96 and 97 level on the upside. We also have to look at the 21-week moving average at 95.16, and it is down right now. PPM2 is negative by 0.33. So there's still a serious downtrend in this market. But as we go sideways for the next several weeks, and as long as we remain above this reversal low that we had here at 92.75, we're going to see these trends start to bleed off and set up further upside. The last market I'll go through tonight is the gold market. We are seeing some downward pressure. We're back under the 1900 level. We did print up to 1910. We look at the market grid on a daily. The 1913 level is R1. We didn't quite make that. On the downside, 1895 is printing right at the S2 level. So far we've seen R1, S2 level. It's possible to continue down in the gold back toward the 1887, maybe to the extreme of 1881. The real story that's being told on gold is on the weekly chart. I also have on the weekly chart a Fibonacci grid to look at, and we have traded right up to that 23.6 Fibonacci retracement, which is at the 1906 level. We were able to print just above that. Last week we saw a high of 1923.60. It's likely we're going to see an inside bar. I don't expect to see this thing follow through on the upside, and I've been talking about this for a while, is that we just don't have the configuration for any type of rally in gold. In fact, if we look at PPM1, a minus 0.45. PPM2 is a positive 0.25. So what that suggests, that we're going to stay between those values. 1874 is the 21-period moving average. The 10-week moving average is 1941, and you also see R2 is 1946. Those two numbers are in sync with each other. R1, 1925, that's basically last week's high. S2 is 1869. The potential of going down to 1850, but that key level will be that 1874 at the 21-week moving average. So expect to see this thing trade back down toward that 21-week. Should hold. The trading range this week is likely to be between S2 and R1, and if it does expand, it looks like it wants to expand to the downside, so we could see an STX at an 1830 level. This will complete the video. Thank you for watching. We'll talk to you tomorrow night.